Lawmakers in Canada, the US, and around the world are trying to figure out how to not let something like Terra's Luna happen again, but at the same time allow crypto to find its footing in our world. Will we continue to live in a Mad Max wasteland, or is there a way to regulate crypto? The founder and CEO of Ripple is here to tell us what he thinks is the best way forward. Please welcome conversation with Wired's global editor-in-chief, Gideon Lichfield, Brad Garlinghouse.
All right, here we are to talk about regulating cryptocurrency, and I want to start by acknowledging that me asking the head of a cryptocurrency how to regulate cryptocurrency is a little bit like me asking a fox how high the chicken wire should be around the hen house. But we don't have a farmer here, so we're going to have to talk to the fox. So with that, tell me, Brad, what is it about cryptocurrency right now that you think should be more tightly regulated than it is?
I think the first thing I think about that maybe should be more clearly regulated, I think about consistency. So I think one of the challenges for every crypto company right now is it's not clear where the rules of the road are. And you have some examples where regulators are going after companies, and then you look at another company doing almost the exact same thing and they're not saying anything. And so the first thing I think about really is just consistency. So everyone has a firm set of rules to follow. As you and I kind of were discussing backstage, I think the vast majority of people in the crypto industry want to play by the rules. Let's just be clear about what the rules are. So the first thing I think of is just like, let's be super clear about what we're trying to regulate.
Yeah. I mean, obviously, the point of regulation is to make an industry safer so that more people can use it. So that should be good for the players in the industry, right? So let's talk about a couple of things specific things that make people unsafe, let's say, or that cause problems. And I'm kind of interested in your views on them. So, you know, how should consumers be protected from, like, basically scams, rug pulls? Somebody creates a currency and then runs off with the money.
Yeah.
What's a good way to protect against that?
Well, first of all, I'm completely supportive of that. You know, those are things that actually we don't need new regulations for. I mean, there are all kinds of existing regulatory frameworks that if someone's committing fraud, to sue them, whether it's you're individually suing or there's a regulator looking out for consumer best interest suing them, the Consumer Financial Protection Board would be one example. So I think a lot of those things, those regulations exist.
Are they getting enforced though? People are getting scammed all the time.
Well, people are getting scammed all the time, whether you're in crypto or not. And are they getting enforced enough? I would say we could do better. And clearly we've seen that with some recent examples. Was there enough understanding of what was happening with some, I'll pick on Luna as an example. Did people fully understand what was happening there? And what was there fraud? I don't know. I haven't followed it closely. But certainly I would expect regulators to have looked more proactively maybe at some of that as opposed to some of the work I've seen regulators do. They're like, wait a minute, these are good actors trying to do good things. Why would you spend all your energy on that?
Right. Well, did you mention Terra Luna just now?
Yes.
Because I think that's less an example of a scam, and it's more an example of creating something that maybe just shouldn't have existed in the first place. So, all right, so there are payment stable coins where they're backed by a currency, and there's a new proposal from the Biden administration that those should be regulated like banks, and they should have deposit insurance. Which, I don't know what you think of that.
I'm not sure is the short answer. I think stable coins as a category, I think, have a role to play, particularly in domestic settlement. I haven't yet seen exactly where the U.S. is going to come out here. Other countries around the world clearly are doing more ahead of the U.S. and how they're kind of approaching central bank issued digital assets. What's confusing to me is why do we need 10 different U.S. dollar stable coins or 20? Right. And if the U.S. If the U.S. is going to do a central bank issued digital currency, why do we need private dollar stable coins also? Right. That gets a little confusing for me.
So maybe we should just have a central bank one. But then Terra Luna is an algorithmic stable coin where basically you generate the notion that this thing is worth $1 because an algorithm says so, but it's set up, it seems to fail. It's set up to go into a death spiral. So should that kind of thing just be outlawed?
Again, I'm not as close to Terra Luna. I did follow the story after it kind of unwound, if you will. And look, it's clear to me that that may not have been a fraud because they actually said, here's what we're doing. They're very transparent. Here's what we're going to do. It's just, it didn't work.
Right.
But I think we need to be a little bit careful, as we look at the meltdown of crypto in the last 30, 45 days, you have to remember that pets.com didn't work at a certain time too.
Right.
Webvan didn't work at a certain time also. Yet Instacart and fill in blank for your delivery mechanism has been hugely successful.
Right.
So Terra Luna as a algorithmic stablecoin didn't work right now with this formula, and does that mean no formulaic stablecoin will ever work?
Right.
I don't know. I think it would be premature to reach that conclusion.
Okay, I mean, so there's clearly the trade-off here, right? There's, on the one hand, you want to, how much do you need to protect people against their own dumb decisions as investors versus the risk of stifling innovation? I mean, are you worried about innovation being stifled?
Oh, I think I'm not worried about it. It's happening. The first piece of advice I give entrepreneurs that are starting companies in the crypto space, to the extent they are US based, the first piece of advice I give them is don't incorporate in the United States. The rules of the road in the United States are not clear as compared to if you're in Japan or the UK or Switzerland or Singapore. These are all countries where the governments have done the work to publish rules of the road that either are codified in law or certainly by published regulation that allow an entrepreneur to build a company, allow investors to come in. When we think back, back to the pets.com era, one of the reasons why so much innovation around the internet happened in the United States is because in the mid-90s, the US government published and codified through law clear regulatory frameworks that allowed investors to flow in and entrepreneurs to know how to build within a rule. You don't really have that in blockchain and crypto in the United States. And so I think you're seeing a lot of leadership outside of the United States, and I think that'll continue.
Right, but so you think even just the sheer lack of clear rules right now is already stifling innovation here? So if we have rules, and will that stifle it even more?
Well, sorry, maybe I answered the question by saying that stifling innovation in the US.
Yes.
I mean, there's clearly immense innovation. Some of it maybe shouldn't ever have existed innovation, as you described. But I think there's clearly innovation happening globally. That's going to happen anytime you have a new technology framework. I think you have this kind of pre-Cambrian era of formative, almost, the foundation, the building blocks are being laid, and people are trying new things. And not everything has worked. That's okay. And as the market resets, I think that's actually a really healthy time to step back and say, is what we're building solving a real problem for a customer, a business, a consumer? Or is it just about speculation? And if it's just about speculation, I don't think it's sustainable.
Right. Just another example then, what about crypto exchanges? Do you think they should be able to trade just whatever they want, or let people trade whatever they want on those exchanges, or should they be taking steps to protect their customers against things that might just be dodgy?
It's a good question. I mean, there is a careful management there, because on one hand, the customer's always right. If customers want to trade X, I mean, Dogecoin. Let's pick on Dogecoin for a minute.
Sure. Why not pick on Dogecoin?
Everybody picks on Dogecoin. I mean, Dogecoin was built as a joke. Some of the founding engineers on it have abandoned the project. It has a very high inflation rate. Should a reputable exchange restrict people from trading Doge because it primarily seems to trade based upon Elon Musk's tweets.
Right.
Okay, so should an exchange say we're not going to allow people to do that? I look at, if the customer wants to trade that, if I were an exchange, I'd probably say, look, we want to provide liquidity around currencies and currency pairs that people want to trade. I don't think most businesses are in the business of telling their customers, is this right or wrong?
So again, I guess that then comes back to the question is, do people need to be protected against something as dumb as Dogecoin, or is it really on, you decided to buy that thing because of Elon Musk tweets, it's all on you?
I mean, another way to think about this is, should the NASDAQ allow, NASDAQ New York Stock Exchange or Toronto Stock Exchange here locally allow a company that maybe has no viable future business model? If that were true, Tesla would never would have gotten public. Of course, it has a future business model today, but for a long time it lost a lot of money, and now it's worth over $1 trillion or something. So right. I don't know. I just think we should be very careful as a set of regulators to think we know best. And I think putting the exchange in the role of protecting consumers to regulate, that feels
right.
dangerous.
I mean, since you brought up the NASDAQ, we can maybe pivot a bit to talking about this question of cryptocurrencies as securities, because NASDAQ is, That's where securities are traded. What the SEC does is it doesn't say you can't trade this. It basically says you have to disclose this much information about your security before you will be allowed to trade it. But if you want to disclose that your security is built on a complete fiction of a business model, go ahead and put that out there and see if anybody buys it. So one of the things...
The SEC would also enforce truthfulness, right? If you disclose false statements, they would prosecute you for false statements.
Yes, but if you truthfully say that your business model is crazy and people still want to buy it, then you can go ahead. But so this comes back to the question that is currently in the debate in the US about securities, about cryptocurrencies being securities versus commodities. Obviously, Ripple is being sued by the SEC over this very question, and I don't want to litigate the lawsuit here on stage with you. But can you talk a little bit about how you see that debate that is playing out now? Which coins should be securities? Which should be commodities? Why does it matter?
Yeah. Well, first, let's back. I agree. I don't want to relitigate it here. It's well documented. But let's back up for a moment and just, when Coinbase went public, which really wasn't that long ago, Coinbase was trading XRP. They enabled consumers and businesses, whatever, to trade XRP. The SEC had to approve their S1 such that Coinbase could go public. The SEC now seems to take the position when they sued us that, hey, XRP is a security and always has been, but they approved Coinbase going public even though Coinbase is not a registered broker-dealer. So there's some contradictions here of the SEC almost not within its own organization knowing left hand, right hand. For me, it's always been pretty clear in my mind, a security as defined by the Howey test gives you right, title, and interest in governance rights. So when Ripple does have shareholders, right? We did a Series A financing, we did a Series B financing, we did a Series C financing. Those people have right, title, and interest, they have governance rights. People who buy XRP don't participate in that framework. And so, I think it's very clear that the SEC, instead of doing the hard work to define a new set of clear rules, a new set of clear regulations, both from the SEC and really the US government in general, they've instead decided, hey, we're going to do we're doing regulation through enforcement. Which is not efficient and really has, I think, stifled innovation in the United States.
But wouldn't you say it's reasonable? They see things that are going, things that are exploding. Some people are being scammed. I mean, of course, they're going to try and enforce when they can.
Well, as we talked about earlier, there's other regulators. I mean, Gary Gensler, the chair of the SEC, has been prone to say the crypto's the Wild West. I mean, I don't know what he means by that. I mean, Ripple as a company is regulated both in the United States and other global regulators in a whole bunch of different ways. So I don't think it's the Wild West at all. I think crypto certainly is a volatile asset class, but it's also worth noting that from the NASDAQ composite hit a peak right before COVID and then was down 55% after COVID. And by comparison, crypto's down maybe 65%. All asset classes have a certain volatility. I don't think it's a regulator's job to determine how that volatility should be accessed by consumers, by businesses, what have you.
Right. It seems as if, tell me what you think of this. Crypto, there was a discussion in crypto tokens, securities or commodities. Should they maybe just be a third thing? I mean, they perform such different functions from traditional commodities or securities in many ways that are we getting bogged down by talking in these old style categories?
I think that is a perfectly plausible solution. I'm not really one to go out and say, hey, we need more regulators and let's create a new entity. It shouldn't be the CFTC or the SEC or Treasury. We should have a new regulator. But I willingly admit, to me, it clearly doesn't fit in the securities bucket. Does it fit perfectly as a currency? Well, some of them, I think, very clearly are first and foremost currencies. Some of them are more commodities. Some of them, have other features. So, sure, maybe we should have that. I don't know that we want to create more regulatory overhead in the United States than where we are today.
Right.
And by the way, I'll go back to the United States is way behind other G20 countries. So in other countries have figured out how to make this work in a way that they feel is protecting consumers, making sure that there are orderly markets, making sure they're not fraudulent activity. It's not actually as hard as I think the United States has made it seem.
So why do you think the US is behind? What's holding it up?
Well, I think first and foremost, you have in the SEC, when you're a hammer, everything looks like a nail. the SEC is like, hey, there's a gray area here. We want to empire build. We want to, build up our responsibility. I think it's hard to know, in at least the case with XRP and Ripple, who is hurt. I mean, you're bringing up, I think, important points around frauds or scams. In this case, you have almost 70,000 people who hold XRP in the United States who are trying to sue the SEC for harming them.
Right.
So, it's a little confusing why the SEC would spend a lot of time and energy on that when we do actually have some things happening in the market that maybe do deserve more scrutiny.
Right. Well, it's a shame Gary Gensler isn't here to defend himself. But let me ask a little bit more then on this. So you are obviously someone who's been in this industry for a long time. You know how to talk to the regulators. You wear a suit. You do everything in that way. But how well do you think the rest of the crypto industry is engaging with regulators and with this problem? Because it feels to me like for a lot of it, as for a lot of parts of the tech industry, they'd just rather regulators went away.
Look, I actually came to Toronto yesterday from Zurich. I was at a central bankers conference in Zurich, and I was thrilled by the reception, in part because they're inviting Ripple to attend. I was on stage with the CEO of Crypto.com. The CEO of Binance was in attendance. And so I think there's a genuine thirst. And again, this was a central banker conference organized by Switzerland and Singapore. There's no real surprise there. They're leading and saying, hey, let's engage private and public conversation to figure out how the rules should work. And let's make sure we have actors who are trying to live by those rules. My experience truly has been, for Ripple anyway, once we meet with regulators, central bankers, and help them understand, here's how our technology works, here's how we are using the open source technology of XRP, they get very comfortable, because the regulations I think most regulators care the most about are know your customer, KYC, anti-money laundering, AML, terrorist financing. Those are very important foundational regulatory frameworks that don't change in how Ripple goes to market. And I think all crypto companies probably could do a better job of understanding those are regulatory frameworks that aren't going to go away in any of the G20 markets.
All right. Last question, since we're getting close to time. Obviously we're now at a point where currencies are a third, a fourth, a fifth of the value that they had 8 months ago. You have a lot of naysayers saying, look, crypto is collapsing again. Actually, what I'm hearing from talking to people who are in crypto, if anyone who's been in it for a long time, is just very sanguine. They're like, okay, this is another point in the roller coaster and it will go back up again. But what do you think it's going to take for this volatility to stabilize in the long run, for cryptocurrencies to become a more stable form of value and more integrated into the global financial system?
Well, I mean, not surprising, the first thing I would say is clear rules of the road, right? One of the things that causes volatility, when the SEC sued Ripple, XRP dropped about 70% in 2 days. So clear rules of the road, clear utility. As liquidity increases, you'll see the actual, the volatility decreases. So I think over time, you see more utility, more real use cases, and it becomes less about the speculative ups and downs and more about, okay, we're solving a real problem for a customer.
Right. Oh. And we have a voice of God telling us to move off the stage, I think. Well, we have 10 seconds left, so we shall do that. Thank you all very much. Thank you, Brad.
Thank you, Gideon.